There are two types of traders in the forex market. We have the aggressive trader, and we also have the trader who stick to some certain kind of confirmation before getting into a trade. Now, what the aggressive trader normally do is whenever price gets into the point of interest, let's say for this example here, the aggressive trader, whenever price gets into the point of interest, they normally do set limit at that zone. Now, most of the time, what we see market do is the market gonna mitigate their their limit and give them profit, like respect the zone, or price is gonna break below it. Now, other type of trader is the one who wants to get further confirmation to where the price is gonna respect that move upward. Now, for this kind of trader, whenever price do mitigate the point of interest, they want to wait for some certain kind of confirmation before getting into this trade. Now, me, I have been using some kind of confirmation, which I will be sharing with you guys. Now, the confirmation I normally use is the engulf candle. Now, take a look at this point here. I want to say whenever price gets into my point of interest, I want to see uh, a kind of pullback up a little bit. This one, and the final candle which engulfs the medication into the POI zone. Now, here is what I'm talking about. Take a look at this point here. This was my uh, point of interest, or rather my demand zone. Now, when price did mitigate this point, you can see when it did mitigate, it pulled back up and traced back down a little bit, and this is the engulf candle here that broke above or closed above the little bit of retracement, right? Now, this is typical example of it. Now we're gonna be going into what price did on Thursday on eurusd. Let's say, let's use the replay to cut it out at this point here. First of all, we want to analyze this trend and see what is happening now. Now, at this point here, we're getting some break of structure to the downside, right? We're selling at this point here. Now, price change structure at this time here. So we're expecting price to retrace back into this demand zone here. Now, on the 5-minute time frame where we normally take our trades on, let's see what happened. Let's see what happened. I'm gonna play this out until Thursday. This was Wednesday. So let's play it out in Thursday. Okay, 30 minutes. So fast. Right. Now back to the 5-minute time frame. This was the start of the Asian section, right? Now we normally want to wait until after the Asian section before getting into some kind of trade. So price already broke on the higher time frame. It's already changed structure, right? Now we are looking into some buy. Let's see if we get some clean, nice buy setup. Now this was what happened. Okay, at this point here, during the ancient section, price was kind of ranging at this point. Now on here, it broke structure. It broke the previous high that was created. Now we can take a look at this demand zone also. This demand zone was being marked out. So this was already the start of London section. Now immediately price did mitigate this our demand zone. Price did mitigate it. We want to see if we get an engulf candle as the final confirmation before we get into this trade. Now, okay, this is the pullback down. Let's see if price engulfs above it. Okay, guys, now take a look at it. This was the mitigation into the demand zone. Now, as soon as price retraces back a little bit and engulfs above it, close above it, the 5 minute candle close above it, that is where we want to be taking our buys from, using instant execution to take our buys at this zone, and our stop loss will just be at that point. Now, where will our target be? Let's see on the 30-minute time frame. We can target the previous high that was being created during during the New York section, or we can target this one here, or rather, there is this imbalance at this point here during this time. So let's say we take it further up into the imbalance. Our target is the imbalance, right? So this trade is 1:8, risking 1% of our capital for 8% return. Let's play this out. Now you can see turning into profit. It was on Thursday trade. I think I posted something like this. All right, guys. So take a look at it. This was a clean trade. This was a clean trade. Now, the idea of this engulf candle is whenever it being formed on our point of interest or our demand zone, if we are buying, we want to see this candle because it's giving us the idea of now price is ready to push up, right? Now, as soon as price mitigate it engulf above it, it's giving us the idea of, yeah, I want to push up from this point. All right, guys. So that was what happened. Now I will show you a few more example on gbpusd. I think during Wednesday. Wednesday, Wednesday. Okay. So let's call it Wednesday on gbpusd. We got another example. Okay. Now use the replay tool. All right. So guys, now on the higher time frame, let me just show you guys on the higher time frame what was really happening on the higher time frame. Now on the 1 hour time frame, price was pretty much coming bearish at this point, but something happened here. There was a demand zone at this point where price did mitigate. There was this demand zone, price did mitigate this demand zone, and we are now reacting on that demand zone. So let's see if we get the buy. Price didn't break below it. You can see the reaction on this point. At this point here, price kind of change structure first. Yeah. So this was Wednesday, and there is also some kind of demand zone which price might most likely come back into. Okay, let's wait if price gets back into that point. But it didn't. What actually happened here was it kind of swept the Asian low liquidity, but it didn't give us an entry. Price didn't give us the final confirmation to enter this trade. So this was all London section doings. So I think this the entry came on New York section. Okay, guys. As soon as price broke above, kind of this, when it might get the higher time frame demand, it pulled back up, right? It gave us another higher low, and this was the previous high. And when price did break above this previous high here, when price did break above it, this was our demand zone, or this was our point of interest here. So we want to see price come back into this zone and give us the final confirmation to buy. So we just wait, play this out. Okay, this was during the New York section. So price now mitigate our point of interest or our demand zone. So this is the pullback up. We want to wait for the engulf candle to form. All right. As soon as price engulfs this zone, we will be entering this point. So that was kind of okay, guys. Yeah, here we have it. This when prices mitigate it, it went pull back up and kind of trace back a little bit with this sell candle here, and it engulfed above it. Now we can enter this trade at this point here. We can enter this trade at this point here and set a stop loss at that point, and let's see where could our target be. Yeah, we could target this highs here. Okay, so let's see if this works out. Alright guys, you see this is a nice 2% trade that did happen on Wednesday trading gbpusd. So you want to always wait for the final confirmation. The final confirmation gives you an edge to the market that okay, price is gonna buy from this point, never gonna retrace back more than what it has done already. All right guys, so you have to master this thing. Don't be an aggressive trader. I think there is also another example during the next day. So let's delete this out and play this very fast. Next day trade. Okay, this was exchange session during Thursday. During Thursday trade opportunity also. You can see when price goes back into this demand zone, kind of go back up. So we're still pretty much on the buys. Now we want to say where can we possibly retrace back in. So this was the Asian section, which though it hasn't completed yet. So let's play it out and see what happens. Okay guys, now we got 1 point here. We got one demand zone at this point, and also I would be marking out this one here. So it seems like price is mitigated, but no, let's refine it into that point. So let's see if price gives us any confirmation at this zone. Okay, you see, if it is an aggressive trader now, those type of trader would have set limit at this point here, and you say he or she would have gotten a loss. So let's delete this out and see what happens next. Okay guys, now as soon as price mitigate this demand zone here, it just aggressively move up. Let's see if we get a confirmation to trade this zone. Alright guys, take a look at what is going on. When price did mitigate this point, it aggressively flies to the upside, and now it's coming back down. And at this point here, this will be the current one I will be looking at. So let's say if price breaks, oh, that was too fast, but I would have gotten in. I did get into this trade at this point here, and my stop loss was set at this point here. Yeah, and my target, let's see where I could have. Okay, at the New York. All right. Now back to the 5 minutes. Let's play this out. So guys, this was the trade. This was the trade. This was 1 to 3%. So you should know this. You should always use the final confirmation. You'll see the wins, the accuracy of using a final confirmation.